Good afternoon and welcome to the Boring Millionaire podcast. Today's Tuesday, September 2nd, and I'm going to discuss what we've seen in the stock market the past 2 weeks and where I believe it's headed. So last week we did see a record-breaking week. The S&P 500 started last week at 6460. It rallied up to 6508 and then fell back to 6460 to close the week out. If you're new to the stock market, the S&P 500 is the generalized measurement of the stock market as a whole. So it's used to basically measure the performance of the stock market and all stocks put together at an average. So we did see an all-time high last week. However, today, Tuesday, September 2nd, we are seeing over a % decline in today's trading. It's the middle of the day, so there's still more trading activity to go on. But we did see an initial fall today. We saw the market rally a touch out of it, but then fell back to that 6380-ish level. Now, I do believe 6380 is a good spot for the market to be at. Prior to last week, the week beforehand, we did see the S&P 500 trading at that 6375 level. And then 2 Fridays ago, on August 22nd, we did see the market rally and send us back above that 6450 level. So we are trading in a little bit of a sideways range, and I don't necessarily think that's a bad thing because it allows opportunities to buy into the market when we're showing weakness like we are today. So on a day like today, what I would be doing is buying the UPRO double weight S&P 500 fund. And what that means is you're putting your money into a fund that invests in the general stock market. So on days like today, if you're a little uncertain on what stocks you should be particularly buying, you could put your money into that UPRO fund and you're getting your money invested in the stock market across the board. So I do like to take advantage of these market ETFs when the market overall is down. And that's what I would be doing over these next few weeks. I do think the market's going to take a breather over the next 2 weeks. And what I mean by that is I think we're going to trade in a sideways narrow range. I think we're going to bounce around between 6,300 and 6,500 on the S&P 500. And I don't think we're going to go much lower than 6,300. All of the trading analytics that I look at, which is the nerdy chart stuff, is telling me that 6,300 is really the lowest that we should be going. The 3-month average on the S&P 500 is 6316. So I do think if we're going to go one step lower, that's where we'll land. And then I do want to say if we fall even further below that, the landing point I expect after that would be 6150 to 6200. Again, at the start of July, that's where we saw the market reach a high at that point. And then from trading forward from there, we saw several declines in the market across the board that sent it to that 6,200 range. So I do think the market is in a little bit of a timid mode right now. We've been rallying for the past 4 months, and I don't mean to be a doomsday speaker, but it only moves in 2 directions. It goes up and it goes down. So being that it's been going up over the past 3 to 4 months very consistently, very calmly and strongly, I do expect a little bit of a breather and a decline in the market across the board. But with that said, it doesn't necessarily mean that it's going to be a free fall drop like we saw in March and April of this year. What it means is that the market is just going to slow down. So I do expect for the next 2 weeks, we're going to see that narrow range like I mentioned. And what our next signal that the market is going to be looking at is the Federal Reserve meeting September 17th. Over the course of this past year, the Federal Reserve has hinted and suggested that they're going to make at least 2 rate cuts. And through this entire 2025, we're 8 months in, and we still haven't seen a single rate cut from them this year. So they promised 2, they've delivered 0, and the market is now really expecting something to come out of this September meeting. So I would advise that if they don't cut rates out of this September meeting, that will be a negative signal for the market overall, and I would expect stocks to perform a little worse than they would be now. However, if they do cut, I expect that they're going to do a massive cut. Being that they suggested they would do 2, I think they're going to just do 1 mega cut at this September meeting, and if that's the case, it will send stocks higher, no question about it. The Federal Reserve cutting rates is a benefit to essentially anybody in the world, but whether you have a loan, whether you're using your money to make more money, or whether it's just a general act of business, the cost of money becomes less, so therefore people will borrow more, and it will incentivize capitalism across the world, and stocks will benefit from that. So that's where the market is looking to next. I do expect that the market's going to do a whole lot of nothing until then. So any weakness we see, if we see the S&P 500 trading at a 6,300, 6,200 range, I would be a buyer of that UPRO. And just a reminder, you're investing for the long term. A farmer doesn't plant the seed and pull the crop the same day. It's a long-term venture, and you're investing for the longer term so that a year from now, 2, 3, 5 years from now, these investments will grow in value, as well as some of these investments will even pay you an income for holding the shares of these companies. So if you have any questions about the stock market, feel free to reach out to me on Facebook, Instagram, and Threads. All of my episodes of my podcast are on YouTube, Spotify, and Apple Podcasts. My mission is to make sure you feel confident about your money. We were never taught these kind of things in school, so here I am to help you get educated on not only finance and investing, but to feel confident about investing your money for a better financial future moving forward. So thank you for tuning in, and I'll see you next week.